Did you know that during times of global financial uncertainty, the flow of capital into Swiss banks increases by billions almost overnight? In fact, right now, money is quietly pouring into Switzerland at levels we haven't seen since the last major banking crisis. But this time, it's not just the ultra-rich. It's tech founders, small business owners, even savvy retail investors. Why? Because behind the scenes, there's a global shift in how wealth is being protected. And if you don't understand it, you're playing defense while others are quietly fortifying their future. And by the end of this video, you'll know exactly why so many are turning to Switzerland again, and how you can use the same strategies without needing millions in your bank account. Let's break it down. Switzerland has always had a certain mystique around its banking system. We're talking about a country where banks have been legally obligated to keep client information confidential since the 1930s. This wasn't just a policy, it was a national tradition protected by some of the most robust privacy laws in the world. Over time, that made Swiss banks the gold standard for wealth protection. But in the 2010s, that secrecy took a hit. After pressure from the US and EU, Switzerland began loosening some of its legendary privacy laws, exchanging information for tax purposes. Many thought that would be the end of Swiss banking dominance. They were wrong. Because what most people didn't realize is that Switzerland didn't lose its edge. It evolved. While some clients did pull out, Swiss banks began adapting their models, improving transparency without compromising on asset protection. They focused on attracting legitimate wealth, investors and companies looking for stability, diversification, and risk management. And that made Swiss banking stronger than ever. Now, here's the part no one's talking about. We're entering a new era of volatility. With rising interest rates, unpredictable monetary policy, political instability in major economies, and digital asset uncertainty, people are no longer just chasing returns. They're trying to preserve what they've already earned. Switzerland, once again, is the safe harbor. But this time, it's not just about secrecy, it's about structure. Swiss banks today offer a very different proposition than they did 20 years ago. We're not just talking about a place to park cash. We're talking about access to multi-currency accounts, global diversification strategies, private equity opportunities, and even crypto custody under regulated frameworks. Here's a quick example. Let's say you're a US-based entrepreneur with assets in dollars, euros, and a bit of Bitcoin. Keeping all that under one jurisdiction means you're exposed to that country's legal, fiscal, and political risks. But a Swiss private bank? It lets you segment those assets across different legal protections. And if something goes wrong, say a sudden regulatory shift or a lawsuit, those assets are far harder to reach. That's not tax evasion, that's risk planning. And in today's world, protecting your assets legally and intelligently is just as important as growing them. The new Swiss banking client isn't hiding anything. They're diversifying intelligently. They're creating buffers against what could go wrong before it does. And with capital controls becoming more common globally, the ability to move and manage money across borders is becoming a luxury and a competitive edge. But here's the twist. This wave of money isn't just being driven by fear, it's also driven by opportunity. Swiss banks are positioning themselves not just as vaults, but as strategic partners for global investors. Imagine having access to a team of advisors who understand global tax law, international real estate, private market deals, and even bespoke asset allocations, all within one institution. That's what modern Swiss banking looks like. And for clients with as little as $250,000, many of these doors are now opening. This isn't the ultra-exclusive invite-only world it used to be. Thanks to increasing competition and the rise of digital onboarding, more investors, especially entrepreneurs and high-earning professionals, are discovering that Swiss banking isn't just for billionaires anymore. And this shift is accelerating fast. In fact, according to the Swiss Bankers Association, assets under management in Switzerland have grown by over $1 trillion in just the past few years. Why? Because when uncertainty hits, people don't just react emotionally, they start looking for structure, predictability, and insulation. That's where Switzerland shines. Here's something that may surprise you. In Switzerland, banks are required to hold far more capital reserves than banks in most other countries. This makes them significantly more resilient in times of financial stress. They also operate under extremely conservative lending models, meaning they're far less exposed to over-leveraged clients or speculative bubbles. When Silicon Valley Bank collapsed, Swiss institutions saw zero impact. No panic, no liquidity run, no domino effect. That kind of robustness gives investors peace of mind, especially those who've experienced volatility firsthand. But there's a more personal reason people are moving their money to Switzerland. It's not just about protecting assets, it's about gaining optionality. When your money is internationally diversified, you have more freedom, more control. You're not tied to the economic fate of one country, one currency, or one central bank. And in an era where governments can freeze accounts, impose capital controls, or raise taxes overnight, that freedom is priceless. Let's take a real-world example. A digital entrepreneur in Latin America recently moved part of his liquidity into Switzerland after new banking regulations in his country restricted international transfers. Within 48 hours of setting up his Swiss multi-currency account, he had full access to USD, CHF, and EUR, and the ability to wire funds globally without restrictions. Now imagine that same flexibility during a market crash, or a political crisis, or an unexpected lawsuit. Money becomes more than wealth. It becomes a tool for survival. And here's what's coming next. Swiss banks are increasingly integrating fintech solutions like AI-powered portfolio management, crypto custody regulated by FINMA, and blockchain-based settlement systems. That's attracting a whole new generation of investors. They're not looking for secrecy. They're looking for sovereignty. And in 2025, that's what Switzerland now represents. So what does this mean for you? It means that waiting until things get unstable to move your money is no longer a smart strategy. The smart money is already making moves, quietly, early, and with precision. It means that you don't need millions to benefit from the same principles the wealthy have used for decades. And it means that the idea of diversification has evolved. It's no longer just about stocks, bonds, and ETFs. It's about jurisdictional diversification. Having your wealth spread across borders, currencies, and legal systems. Because the real risk today isn't just market volatility, it's systemic fragility. When all your money sits in one place, one currency, one banking system, you're betting that nothing ever goes wrong in that one place. But what happens when inflation erodes your local currency? Or when a new tax law targets capital gains? Or when your bank places limits on international transfers overnight? These things aren't hypotheticals. They've already happened in countries people once thought were safe. Meanwhile, those who planned ahead, those who placed part of their wealth outside their borders, weren't just protected. They were empowered. Let's go a layer deeper. Wealth protection isn't just about moving money, it's about building optionality. The ability to respond to crisis without panic. To pivot your strategy when the world changes. To access liquidity, relocate, invest, or protect your family without waiting for permission. That's the power of a Swiss account. It's not just a vault. It's a tool for global freedom. And it's why entrepreneurs, digital nomads, and investors from emerging markets are turning to Switzerland like never before. They're not just looking for better returns. They're looking for control. And Switzerland delivers that with a unique combination of privacy, compliance, and resilience. Here's something few people realize. Swiss financial institutions aren't just managing cash. They're also facilitating international real estate purchases, helping clients open companies in tax-friendly jurisdictions, and giving access to private market deals that aren't available on public exchanges. All under one roof. That means you can go from managing your portfolio to investing in a European real estate fund, to storing your crypto in a regulated cold wallet without leaving the bank's ecosystem. That's what makes Switzerland unique. It's not just diversification, it's integration. Everything in one place, optimized for risk, and structured with global resilience in mind. So what's the takeaway? Switzerland is no longer just a legacy destination for old money. It's the new playbook for modern investors who want to protect, preserve, and grow their wealth in an increasingly unstable world. And the cost of waiting is higher than ever, because once the storm hits, it's already too late to build your shelter. That's why smart investors are acting now, setting up offshore structures, diversifying assets internationally, and building relationships with private banks before they actually need them. So if you've been sitting on the sidelines watching the news wondering how to protect your future, this is your sign. You don't need to move all your money. You just need to move strategically, because the world is changing fast, and those who act early will have options. Those who wait, they'll have regrets. Let's quickly recap. Switzerland is rising again, not as a shadowy banking haven, but as a smart, future-proof hub for wealth management. It offers asset protection, cross-border freedom, modern banking tech, and access to global investments, even for clients starting under $1 million. It's not a luxury anymore, it's a strategy. If you found this helpful, give the video a like and make sure to subscribe. We break down global investing and wealth strategies every week. Let me know in the comments if you want a deep dive on how to open a Swiss account step by step. Because in today's world, the smartest thing you can do is prepare before you have to.